Okay, so let's unpack this. We're diving deep today into, well, a real retail titan, Walmart. WMT, a company name that's pretty much synonymous with everyday low prices, right?
Absolutely. And the sources we looked at, they really highlight its just massive market dominance. Plus, its kind of intriguing stock path. And, the big question everyone asks, is it actually good value right now?
Exactly. So our mission, as I see it, is to get beyond just the surface level stuff.
Right. We need to really understand Walmart's, let's say, complex profile.
Yeah.
Its clear strengths, sure, but also the strategic moves it's making, and importantly, the challenges it's facing, because that retail landscape, it's constantly shifting.
And what jumps out immediately from the research is just the sheer scale. I mean, it's the world's biggest company by revenue. That's huge. Here in the U.S. grocery market alone, the sources say it holds, 21.2%?
Yeah, and that goes up to 25% if you add Sam's Club in there.
Which is more than double its closest competitor.
Yeah.
What does that kind of dominance really mean beyond just the big number?
Well, what's really fascinating, I think, is how that dominance gives them incredible leverage, with suppliers, and it lets them invest heavily in new stuff. But the picture really changes when you look at e-commerce. That's where it gets interesting.
How so?
Despite having stores everywhere, our sources show Walmart's U.S. e-commerce share is only around 6.4%.
Wow, okay.
Which, compared to Amazon's 37.6%, is, a big gap. And this really highlights that high-stakes battle for retail's future. It's why Walmart pivoted so hard towards that omni-channel model.
Omni-channel, integrating the physical and digital.
Exactly. Pouring money into connecting stores with online ops, using stores almost like mini warehouses for same-day pickup, delivery.
So basically weaponizing their store network.
Precisely. It's a unique advantage they have over the pure online players.
Okay, so this digital fight is intense. How has this strategy and just Walmart's overall resilience shown up in its stock performance over, say, the last decade? Because the data we saw shows a pretty consistent long-term climb from around, $19.78 back in July 2015.
Yeah, something like that.
To a projected $96.10 by July 2025. That's a serious gain.
But the sources also flagged a rough patch, didn't they, around 2015?
They did, yeah. There was a notable downturn then. The stock dropped almost 29%.
Ouch. Why was that?
It was quite telling, actually. It likely reflected some serious market nervousness about whether Walmart could actually adapt, to the whole e-commerce wave.
Right, the Amazon threat.
Exactly. But then you look at the bigger picture, that strong recovery afterwards, including, get this, a 70.16% gain just in 2024 alone.
70%. Wow.
It strongly suggests the market reevaluated. It decided, okay, Walmart can adapt. And that performance lines up with their huge capital spending, like $16.8 billion in fiscal 23. Massive investments in tech, automation, that whole digital transformation we talked about.
Okay, so we've got the financial power, the strategic shifts. But operating at this kind of massive scale, especially during big changes, doesn't always go smoothly, does it? What did the sources say about legal or regulatory hurdles? That's a really important point. Because, running something this big is complex, and Walmart's navigated some serious controversies. The sources mentioned, for instance, the Mexico bribery scandal.
Yeah.
That ended up costing them, $137 million in criminal penalties?
Right, I remember reading that.
And another $144 million in disgorgement, basically paying back profits because their anti-corruption controls weren't strong enough.
And more recently,
you had that huge $3.1 billion nationwide opioid settlement in 2022 tied to their pharmacy operations.
Yeah.
And even smaller things, relatively speaking, like a $7.5 million settlement in California over hazardous waste disposal.
So it illustrates the constant scrutiny.
Exactly. And just the operational complexities of being that big and spread out.
Okay, so pulling this all together, market leader, big digital push, strong stock run, but also these operational issues and past controversies. What does this all mean for you, the listener, if you're looking at Walmart stock today? Where does the value argument land?
Well, if you applied, say, Benjamin Graham's value investing ideas, Walmart definitely ticks some boxes. Good size, strong cash flow, pays dividends consistently, qualitative stuff, check. But quantitatively, it's a different story. Its current price-to-earnings ratio, PE, is sitting around 40.88.
Which is high.
Very high compared to Graham's sort of benchmark of 15. And the price-to-book ratio, 9.112. Graham liked to see that below 1.5.
So way off those traditional value marks.
Way off. It strongly suggests that at its current price, the stock looks, overvalued if you want that deep margin of safety Graham talked about. It feels like a lot of its future growth, its stability.
Yeah.
It seems like it's already priced in by the market.
Right. So Walmart Inc. presents this really complex picture, doesn't it? You've got the undisputed retail leader, clear strategy for the digital age, stock's done incredibly well.
Yep. But it faces that fierce e-commerce fight, carries that history of operational bumps, and crucially, a valuation that, by those classic measures, looks pretty stretched, leaves maybe limited upside or safety margin. So what really stands out to you after hearing all this? How much weight do you personally put on that market leadership and the adaptation strategy versus, say, a traditional margin of safety? Something to think about.